Some investors in Toronto have used a strategy called the differential over the last 10, 15 years to do way better than investors who actually poured money to the pre-construction market. In this video, I'm going to explain to you what the differential strategy is and how it benefited investors in the Toronto market during this period. So if you're thinking of buying or selling or investing in the Toronto condos, please get in touch with me. You can use one of these links, schedule a call with us, or just go to booksamir.com. To understand this differential strategy, you first have to understand what happened to the Toronto condo market. And for that, we're going to go all the way back to 2011. Once I cover what happened in the condo market since 2011, I will then explain to you how some investors use this differential strategy to have excellent gains in the Toronto condo market even until 2024. Anytime an investor in any market invests in real estate, they're actually looking for two things to happen. They're first of all looking for capital appreciation, and second of all, they're looking for positive cash flow. If you ask any Toronto investor at the moment, there's hardly anybody who has, forget positive or balanced cash flow. Pretty much everyone has negative cash flow, and there are reasons for that. Well, to understand that, you first have to understand what happened to the Toronto condo market to get to where it is today. Now, for this video, I'm only going to use two specific districts in the downtown core market, that is CO1 and CO8. These districts basically cover the area from Liberty Village all the way to King East, as south as the Water, and as north as Yorkville. Back in 2011, the average price of a condo in these districts was $398,000. In 2011, there were 1,440 sales. To understand what the condo market was like in 2011, you have to understand what had happened slightly prior to those years. So in 2008, we had the economic meltdown. 2009, 2010 were pretty flat years. The economy was okay. Interest rates were stable. There really wasn't anything exciting happening in the Toronto condo market. In 2011, in these two districts, the average price of a Toronto condo was just under $400,000. It was about $398,000. And that year, there were 1,440 sales. Now, as I said, investors are always looking at capital appreciation and cash flow. And for cash flow, you need to know what the rental numbers were. So back in 2011, the average price for a one-bedroom condo in the CO1 district was $1,575. A two-bedroom was renting for $2,225. In the CO8 district in 2011, a one-bedroom condo was $1,613, and a two-bedroom was $2,151. Now, these numbers seem so low compared to what's happening in the market today. Even with subdued rents, most one-bedrooms in Toronto are renting for between $2,200 to $2,300, some as high as $2,500. And most two-bedrooms today are about $3,400 to $3,600. Now, anytime you see spikes in the real estate market, they are generally a result of something that is not related to real estate. We saw that during COVID. We saw that during the interest rate hikes last couple of years. So I'm going to show you what happened to the condo market and what caused spikes in the market from 2011. So from 2011 to 2013, the market was pretty stagnant. The average price went from $398,000 to about $408,000. The average number of sales hovered around 1,350 to 1,400 sales a year. Now, the change in the market came with the pre-construction market picking up. And you have to understand one thing. Nobody knows the condo market better than builders. Most big builders have been in business 60, 70, 80 years. They're multi-generational families that have been investing in this business. They hold land. They know this business inside out. So there's one thing you must understand, that you see, when you're buying a resale condo, most agents who are on the buyer side, meaning that they're representing the buyer, get paid 2.5% on that sale. However, if they sell a pre-construction condo, they get paid 4%. Yeah, it's a little bit less than that because generally that commission is net of HST, but it's still a lot higher than agents get when they sell resale. So think about it. Builders are the ones who have the most control over the market. They understand the market way better than any other agent out there. So why are they paying higher commissions to agents to sell their own product when they've been in the business 80 years? Well, the reason is that builders were selling an inflated product. And that's where the differential strategy for some investors came. See, the differential strategy is this. Let's say a very reputable builder builds a great tower, okay? And that tower, let's say, is selling now at $1,100 or $1,200 a square foot. You as an investor look at, okay, so what is comparable to this building? Doesn't have to be a 100% comparable, but somewhat comparable to this, swanky tower coming up that I can buy within a 1 to 2 minute walking distance. Well, once these condos started selling for $1,100, $1,200 a square foot, astute investors started buying condos in the resale market around those towers for about $300 to $400 less per square foot. That was a differential gain. Not to mention that once those investors closed on those resale properties, they started collecting rent. People who were buying pre-construction may not be putting 20% right away, but they were putting about 15% pretty quickly. But they weren't collecting rent for 4 years or even 5 years in some cases. So as the pre-construction market started picking up, so did the resale market. You see this tower coming up and it sells immediately within like a week. The builder's able to sell 350, 400 condos. What do you think happens to all those people who could not get in? Not everybody was able to buy pre-construction condos. So those investors started going into the resale market. And people who were selling those condos around those pre-construction projects said, listen, you know what? My condo is way less than the $1,100, $1,200 a lot of investors are willing to pay. So the resale prices of condos started going up. And you really saw that trend change in 2015 and 2016. In 2015, the average price of a condo shot up to $446,000. That is a significant change from the $398,000 average in 2011. The number of sales in 2015 went up to 1,656 from 1,440. Now, who was buying these pre-construction condos? So if you actually look at any reports, they'll say, oh, you know what, the foreign investment in Toronto is not much. Well, it depends what you consider foreign investment. You see, let's say somebody comes into the country in 3-4 years, they get their citizenship. Now they're Canadian. Yes, they are Canadian. And they have this cash to buy these properties, which your average Canadian can't. So the question to consider is, yes, this person is Canadian, but this money that they have to buy these condos, was that Canadian earned money or that's money that has come from another country? So really, it was the foreign money disguised as into new Canadians who were buying up these condos. So really, it was foreign money that was driving the market up. And boy, did it ever drive the market. And you really saw that in 2016, 2017. Hence, in 2017, they've brought the foreign buyers tax, which really didn't do much. But just look at the difference in 2017. In 2017, the average price of a condo shot up to $600,000. That's almost $200,000 more than the average price of $398 back in 2011. Sales in 2016 shot up to $1,906 from $1,440 in 2011. And 2017 was the only year, barring 2022, where actually the number of sales in Toronto crossed the 2,000 mark threshold. In 2017, there were 2,018 sales in the Toronto condo market. Now remember, I'm just talking about resale numbers. I'm actually not talking about pre-construction closings that happened during this time. This is only resale numbers. Now during this time, every pre-construction project that's coming up is getting sold. That's what's actually driving the resale market. More and more investors are entering the market also because the rental market kept getting stronger. Rents for a one-bedroom condo shot up to $2,343 in 2019 from $1,575 in 2011. Two-bedroom condos shot up to $3,300 from $2,225 in 2011. So investors are like, well, listen, this condo market certainly keeps appreciating. The rents are appreciating. More and more investors are driving into the market. As more investors driving into the market, it becomes very, very hard for young first-time buyers in Toronto to buy condos. Hence, the rental market starts shooting up even more. Now comes COVID. It changes the condo market again. Yes, the rental market completely got slaughtered during COVID. A lot of people got great deals. A lot of condos were vacant for a while. But the number of sales just would keep climbing. And the average price kept climbing. Why? Because of interest rates. A lot of pseudo investors who thought that they can now afford to buy an investment got into the market. The average price increased to $727,000 in 2020 from $674,000 in 2018. The number of sales increased in 2020 from 1,574 from 2018 to 1,835 in 2020. And then came the magic year in Toronto real estate, 2021, which had the highest number of sales ever in the Toronto condo market, completely driven by the interest rate. And you really got to put this number in perspective. In 2021, the number of sales shot up to 2,971. The best year before that was 2017 at 2,018 sales. Almost a 50% increase from the record year of 2017. Average price increased to $751. And 2022, the average price of a Toronto condo almost hit $800,000. So again, there's a massive spike in the market, and it's not because of real estate. It's actually something that is not related to real estate. Due to COVID, the interest rates dropped. That was an external effect on the condo market. Hence, there was a massive increase in the average price of a Toronto condo. Even now, a lot of pre-construction projects are selling out, and now the average price of some of these projects is $1,600, $1,700. Some projects even cross the $2,000 per square foot mark. Now, a lot of people think that the rents have been really, really poor for the last couple of years. They're actually improving. The rent for a one-bedroom condo increased from $2,239 in 2021 to $2,549 in 2024. Two-bedroom condos increased from $3,189 in 2021 to $3,549 in 2024. Now, there's again another factor that is not related to the real estate market. Interest rates go up. What happens with that? Obviously, prices come down. Number of sales come down. The average price of a condo reduced from $799,000 in 2022 to $721,000 in 2024. Number of sales went to pretty much half, from 2,971 to 1,420 in 2024. Again, I'm just talking resale numbers. There were a lot of people who closed some very, very expensive projects from pre-con during these times. A lot of people had to sell their existing condos to close their new pre-construction closings that were coming up in 2023 and 2024. To sum it all up, the people who've made really good money in the Toronto condo market are the ones who played this differential game. And again, the differential strategy is very simple. I see a massive tower coming up built by a reputable builder that is selling at $1,200, $1,300, $1,400 a square foot. I can buy resale around it for $1,000, $1,100 a square foot. My differential is $300,000 on the day of purchase. Now imagine when the pre-construction investor comes to the market to actually try to make a profit on that pre-construction purchase they've made at $1,450 a square foot. Well, they got to sell at least $1,550, maybe $1,600. Now my differential is about $500 per square foot. Obviously, those condos are not going to sell at $1,600 a square foot, but for sure, it makes my resale purchase look a lot smarter than those pre-construction projects. Not to mention, I've been collecting rent for all this while. So you must understand that the Toronto condo market has two sets of investors. Some investors who only bought resale have bought more resale, refinanced those properties to buy more resale properties. And then there are those investors who played the pre-con game. They have had staggered closings. Oh, I'll close this, refi that, then I'll close this, refi that, and I've closed this, and I'll refi that. Basically, they're buying inflated product to buy more inflated product, to buy no more inflated product, but now it's caught up with them, and it's very, very tough for some investors who are carrying projects that are not appraising. And actually, even at a loss, they're not able to sell. I believe where all this is going to have a positive effect on the market is for your average Torontonian, your average first-time buyer. I think this is great news for them because a lot of investors who were pseudo-investors are not going to enter the condo market for a while. Forget pre-con or resale. Number two, people who can actually buy in the resale market are doing so for long-term growth. Okay, they're looking at actually not appreciation, but the amount of rent increase they can have. Not the next year, not in the next 5 years, but 10 years. These are people who are looking to build generational wealth for their family. I have a lot of clients who are buying condos today for their kids. They're like, listen, my kid's about 8 right now. Maybe in 10, 15 years, I'll have to fork out a down payment for my child to buy their first house. It's better that I invest in the condo market now. Am I going to have balanced cash flow? Most likely not, but still a portion of it is going to be paid by my tenant. 2025 is the year for two people in the condo market. One, investors who are looking to play the long-term game, and secondly, for first-time buyers who are looking to get into the market. Prices are going to stay stable, interest rates are going to come down, and you're going to have less competition from investors. So if you got value out of this video, please subscribe to our channel, like this video, hit that bell icon. Thanks for watching, and I'll see you in the next video. Take care.